Basically, we saw the doldrums that have sort of characterized the last year and a half of the recovery come to an end in the fourth quarter of last year. It's going to be a very solid quarter when the numbers finally come out, 3 to 3.5% growth. The big question, of course, is what happens in 2011? Will that momentum be carried forward? Initially, my answer would have been absolutely not, because we have big tax increases coming into place as a result of the end of some of the stimulus packages. And of course, all said and done, the Fed had pretty much tapped out of bullets with QE1. Of course, as we know, the Fed announced QE2 right after the last election. And of course, Obama worked with the Republicans to extend those tax cuts for the next 2 years. The result of that, of course, is that the next 2 years are going to be quite good. The recovery will continue. It will not be 7 or 8% growth, but we expect at least solid threes over the next 2 years. And frankly, as a result of that, the economy is going to be quite good, and you're going to start seeing that reflected in some of the underlying fundamentals in the commercial real estate industry. Perhaps more importantly, with QE2 in particular, you're seeing a lot of money come off the sidelines, and suddenly they're trying to place that money into investments. And as a result of that, you're starting to see cap rates fall yet again, despite the fact that clearly the commercial industry is still just at the beginning of recovery overall. So the next couple of years are going to be good. Now, do we have medium-term worries? The answer is absolutely. We haven't really burned off the excesses that put us into the mess in the first place. Rather, we have simply pushed these problems into the future. The tax cuts are masking the fact that Americans are still overspending. At some point in time, we're going to have to see taxes go up as a result of this federal budget deficit, which is being blown out of complete proportion. And as a result of that, at some point in time, we're going to have to see consumers pull back because of those higher taxes. Equivalently, we're still enjoying very low interest rates right now. Interest rates that at some point in time are going to have to go up as the Fed inevitably has to tighten on the back end of all this monetary loosening. When in fact the Fed starts to do that, you'll see interest rates rise, and of course for those people who are out there buying commercial real estate at 5 or 5.5 cap, they're going to be obviously wondering how good of investment that actually was. So enjoy the next couple of years, but the bottom line was keep a little voice of caution in the back of your head and recognize that we have not fully burned off these problems. We've simply pushed them into the future. The big question is, will the U.S. economy have enough momentum to basically work its way through the problems when those inevitable tax hikes and monetary tightening occur?